Well, folks, they thought they had us. They thought they had us after First Republic's earnings yesterday. Market was down big, and everybody thought, oh man, oh boy, these earnings, they might be bad or something like that. And boy, did we just get an opposite situation that played out here. I'm going to take you through the numbers in depth too. I'm going to pull up income statements, show you what's going on, good and bad with these companies' earnings, and there is good and bad. So if you are thinking about owning any of these stocks, if you own any of these stocks, this is going to be a very important video for you, okay? Google stock up nicely after hours. Mr. Softy, actually, that's a fairly big move for Microsoft after hours. Microsoft's not a big moving stock, so when it's up about 5% after hours, that's a large move for that stock. Chipotle's up about 7-8% after hours. Enphase is the one that's down big, and we'll discuss why that one's down big here. That's been a stock that's done people very well, I would say 2019, 2020, 2021, but really over the past year, it hasn't done people so good, let's just put it that way. So we'll discuss that as well. Amazon's getting a benefit from this, right? Amazon's up after hours. Meta's up after hours as well, okay? And obviously Meta and Amazon earnings will be coming here in the next 48 hours. By the way, thank you everybody that's joined me as always, folks. Busy video here. So first one we're going to start out with here is Visa, which Visa is also green after hours, okay? So Visa numbers just came out here about an hour ago or so. And I got to say, these are impressive, okay? Revenue up 7%. As far as on a GAAP basis, year over year. Services revenue up 10%. Data processing revenues up 24%. As far as other revenues, up 16%. Client incentives, that was up 16%. That's the one that's red, right? I mean, you don't want to ideally see client incentives up that much, but at the end of the day, like in this sort of business, that's just the way it's going to be, right? Net revenues were up 11% on a year-over-year basis. That's impressive. Like, that's a good number, man. In this environment, that's a very good number. Total operating expenses were up 11%. So, you know, when you kind of take it from that standpoint, that's not super impressive. But the good news is, although the percentages are the same, the dollar amount is much, much bigger for total revenues, obviously, than the dollar amount for total operating expenses. So net, as far as net income goes, up 17% on a year-over-year basis, and earnings per share up 20% year-over-year. That's an extremely impressive number out of Visa there. Now, this is pretty shocking, folks. I gotta say, this is pretty shocking. Because when you look at Visa, it looks like kind of an expensive stock. Forward P of, let's say, 27, which, you know, for Visa, it's one of those companies you're like, is Visa really that much of a growth company, right? Because if you're talking about, you know, you're pushing above 25, especially if you're pushing 30 as far as trailing forward Ps, a lot of people look at those sorts of numbers and they say, you know, I think it might be overvalued. But the fact is, if you can grow EPS at 20% at a 27 forward P, that's undervalued stock. And that's pretty shocking for a company like Visa here. So, impressive quarterly report. Visa is one of the most well-run companies in the world. I got to say that, okay? And one of the best business models overall. Google McDougal. Google's going to tell us a lot about what's going on out there, okay? Google search. That business, slight growth. Okay, we'll give them a green as far as that goes. YouTube business down year over year, which is, you know, it's been pretty shocking to see actually YouTube revenue be down because that's been such a massive growth engine for Google for 10 plus years. But, you know, if you're wondering, like, why do most of the finance YouTubers hardly post now or not post at all? The reason is, like, Google, as far as ad rates they're going down, and views have gone down massively for the finance space in general. So for a lot of folks, it's not even worth their time to even produce YouTube videos anymore now at this point in time, which is an interesting kind of time period we're going through. And so that's why that's going on, man. It's just the way it is. YouTube's in a tough spot right now. As for Google Network, that was also down on a year-over-year basis there, 8.1 billion the same quarter last year, 7.4, right? Google advertising in general, as far as everything goes, roughly, you know, in line for Google. That's not impressive, okay? Now, Google other business doing very well. That was up about $600 million year-over-year basis, okay? Google services total, yeah, I mean, for Google, that's not going to cut the mustard. You know what I mean? Like, this is Google McDougal we're talking about. Google Cloud, extremely strong from Google Cloud, up about $1.6 billion year over year. Other bets, surprisingly, significantly down as far as a year-over-year basis here. Total revenues up about $1.7 billion, so we'll give them a green as far as that goes. I gave them a red for this, man. And I know they're supposed to do some cuts here, but still, man, 163,000 employees versus, 163,000 at the same time last year. Now they got 190,000. That's 27,000 uptick. You know, there's no reason to have a 27,000 uptick when your business is in this tough of a place right now. Absolutely ridiculous, right? They need to cut at least 27,000 employees. That's all I have to say about that, okay? Meta's done it right. Meta's cutting employees in a massive, massive way, and it seems like Google's just kind of lagged there. I don't know, I think for Google, it's probably been a really tough decision because Google's always been known as like one of the best workplaces, and it's just, such a great place to work, and I think it's probably hard for them to mentally wrap their heads around the fact that they need to cut by tens of thousands of employees at the end of the day when it comes to this, right? Now, this, I gotta say, is really, really bad news for Google. And I mean really bad news, okay? So revenue on a constant currency basis up 6% year over year. Okay, here's the problem. Operating income came in at $17.4 billion. This was over $20 billion at this time last year. Operating margin has gone from 30% to 25%. And here's the deal. They had basically a $1.1 billion expense last year in this quarter, where now they had like an $800 million kind of more like one-off gain here. Okay, so that's like a $1.9 billion swing there roughly. Okay, so even with that swing, their net income was still down a shocking $1.4 billion year over year. But you tack on this on top of that, and it would have been down like what, 3.3 billion or so? As far as net income, that's very troubling for Google. And that just goes to show you what I just showed you there with employees. They need to cut, and they need to cut by tens of thousands of employees to get this business in the right size. Google's not the sort of company that should be having their true, in my opinion, their true net income going down about $3.3 billion on a year-over-year basis. That's a disaster for Google McDougal there, okay? But stock's up after hours, and I think that just really comes down to, the fact that it might have been a little better than feared, and Google's valuation is somewhat attractive. We'll see if the games hold tomorrow for Google. We'll see about that, okay? If you want to watch a company that is just perfection in execution, look at Mr. Softy's numbers. They're absolutely incredible. Microsoft Cloud revenue, 25% up year over year on a constant currency basis. Office commercial products and cloud services up 17%. Office 365 up 18%. Office consumer products up 4%. 10% on LinkedIn up year over year. Dynamics products and cloud services, 21%. Dynamics 365, 29%, 21%, 31% growth. I mean, these are just incredible, right? Windows OEM was the one that was down, 28% there. Devices down 28%. I guess that shouldn't surprise us. They've never really been strong there, right? And Xbox was a little weaker. That was at 5% growth on a year-over-year basis. I mean, that's perfection. It's perfection. In this environment, for a company to put up those sorts of numbers, it just shows you why Microsoft is the company it is and why it's respected the way this company is respected. Because those numbers are flat out amazing. Just absolutely amazing from Microsoft. It doesn't get better than that. You can make an argument that maybe this might be the most well-run company in the world right now, to be honest, and maybe the best business model in the world right now. Now, to dig a little deeper here, right? Also very intriguing. Total revenues, I gave it a green here because we're up over $3 billion, about $3.5 billion revenues up year over year. Total cost of revenue up not nearly as much as revenues up. That's great to see. That means your gross margin is going to be powerful, right? About $3 billion up gross margin dollar amount. Operating income, $22 billion versus $20.3 billion the same quarter last year. So you're basically up about $2 billion operating income. Net income is up a nice, let's call it $1.5 billion or so there. EPS, 246 versus 223 the same quarter last year. Mr. Softy, absolutely amazing. And it goes to show you why Microsoft stock has done so phenomenal over the past year, right? I mean, you'd say maybe it's not phenomenal. It's down 1% in the past year, but that compares to a NASDAQ that's down over 9%. So we're talking about a epic difference there. I mean, and when you're talking about 8 percentage points on the downward side, that's a huge, huge accomplishment from Microsoft. So Microsoft just continues to actually be, I mean, you could make an argument that this stock's an easy buy. Like not a scary buy, an easy buy. And that's amazing to hear that, right? Price to sales ratio, some people look at that. You don't look at price to sales ratio when it comes to Mr. Softy. You look at PE ratio, right? And for a company that executes like this at a 30 PE, it's not that high actually, okay? Chipotle, okay? What the heck, Chipotle? You guys have the best earnings I've seen of any company so far this earnings season, and I don't know if anybody's going to beat this earnings. This is incredible from Chipotle, okay? Great growth on top line. I mean, 236 they did for revenue in this latest quarter versus just over 2 billion. That's a phenomenal growth. That's over $300 million of growth in terms of revenue there, okay? Food and beverage packaging, down year over year. That's great news. Labor as a percent of revenue, down year over year. Occupancy down year over year. Other operating costs, down year over year. General administrative expenses, down over year. And all total operating expenses were 90.6% of revenues last year in the same quarter. Now they're down to 84.5% in this latest quarter. That is amazing. Income from operations was up substantially, $367 million versus $190 million here. So now their income from operations is, 15.5% of revenues. That's incredible. From 9.4%, what a turn. What a turn for Chipotle. As far as net income, now they have a 12.3% net income percentage versus revenues. That's incredible. $291 million net income versus the same quarter last year, $158 million. I mean, you got to be flipping my flapjacks. EPS, $10.56 versus $5.64 in the same quarter last year. I mean, if I was a Chipotle shareholder, CMG, I would just be jumping over the moon. I mean, it literally doesn't get better than that. That's incredible, man. To have that sort of revenue growth and have your expenses fall in line, especially in this environment. Sure, inflation's made a lot of progress. We're making progress with inflation, but let's not fool ourselves. Inflation's still high, right? Incredible numbers out of Chipotle. Enphase Energy, this one, tough, right? Down over 16% after hours here, roughly, for Enphase. And do remember, in the last 52 weeks, this was a stock that was nearly $340 a share, right? So basically, the stock's been, let's call it about cut in half now at this point in time, right? And we'll speak about the real reason why this stock is down so substantially, okay? Now, if we look at a sequential basis, right? Revenue growth is basically stalling out for Enphase at this point in time, right? Which, for growth stocks, a lot of people look at sequential basis. They're like, yeah, it's great year over year, but whoa, what the heck's going on here? Our growth is also stalling at this point in time, right? Net income on a sequential basis actually down on a sequential basis. Oh boy, okay? EPS actually down on a sequential basis. And if you look at non-GAAP, right? On a non-GAAP basis, they went from $212 million in Q4 to $192 million. So for a stock like Enphase, folks, this is a epic problem, okay? Because this isn't necessarily a cheap stock. If this stock was valued at a 24p, it's a different situation, right? But this stock's been valued 65, 36 forward P's on the stock. And if you're talking about the possibility that growth is coming to a standstill here, I'm just telling you that's going to freak out people in a massive way when they're in a stock that is a higher valued stock, right, in terms of valuation metrics. And so this is, freaking a lot of people out of Enphase, and they're really going to have to figure out, where's growth going with this company? Are we really stalling this baby out? Is this going to be a 5% grower, 10% grower? Could revenues go negative? These are thoughts that creep into people's minds, okay? Doesn't mean it's true, doesn't mean it's accurate. It's the thoughts that creep into people's minds when they see a sequential quarter that bad, okay? And that's why the stock is down 16+% here after hours, right? And we witnessed this go on with Tesla, right? Why has Tesla gone down 51%, 52% over the past year? Because this one had a big valuation on it and growth slowed in a massive way. So when you are dealing with these, this is one of the big risks with growth stocks, right? It's exciting. Growth stocks are exciting, right? I own a lot of growth stocks in my portfolios, obviously, and I believe they had tremendous 3-year, 5-year, 7-year, 10-year futures in front of them. But at the end of the day, when you're a growth stock and that growth starts to stall, it's not quite what it was. You're going to see a mass movement out of that stock, and you will see an epic move down in the stock price of that particular company. And that's exactly what we saw in Tesla over the past year. It's exactly what we're seeing in Enphase now. You saw this also with Shopify. You saw this with Netflix. We could go through the list of stocks. When you come off of great growth and all of a sudden you're barely growing, or there's even a thought process about, is this company's revenues going to go negative? Is that a possibility? It absolutely wrecks the stock price of that company, okay? And so that's why Enphase is down massively, and it is a risk factor we all have to consider whenever you're investing in a growth stock, is can they keep, value stocks have their own risk, dividend stocks have their own risk, right? Of like, can they keep their business model stable and growing just a few percent a year? With growth stocks, if all of a sudden you go from, 40% revenue growth to maybe 20%, that could mean your stock price is cut 40, 50%. And it happens fast. We're talking about months. We're not talking about years. We're talking about months, okay? And so just always keep that in mind, folks. Hope you enjoyed today's video. As always, I appreciate y'all joining me. If you're looking to apply to join my private stock group, the Private Wealth Group, check out the description area. That will be to an application down there to apply to join us in there if you are interested in that and joining myself and the 6- and 7-figure members. Much love and have a great day.